We're now in conversation with Tata Motors, and the management has been joining us for this very special conversation. We're now being joined by Mr. Shailesh Chandra, who is the Managing Director of the passenger car as well as the electric vehicle business. Mr. Chandra, thanks so much for joining in and give us your time here at NDTV Profit. Before getting to business, because one of the key aspects has been the growth of the cars in India. Now, last year was a very subdued year, just 2 to 3% growth that we've seen. And it was a tough year for the industry as a whole, as well as for Tata Motors in terms of sales performance. Before I get into specifics, what is the kind of expectations that you have for FY26? Because it will be a year of multiple new launches. So is the expectation largely around similar to, I think the outlook was 3 to 5% last year. Any kind of estimate and guidance that you can give us in terms of sales performance for this year?
So see, post-COVID, there was a significant growth that the industry had witnessed. We must realize that FY20 to FY25, the industry has grown from 2.7 million to 4.3 million. That's a steep growth. It is only in the last 2 financial years that we have seen moderation. In FY24, it was about 8% growth, and as you said, in FY25, it was 2 to 3. This year, the good news is that it has sustained at that level. So I'm seeing the brighter side of it. And this year also, basis whatever we have been triangulating based on, different agencies, what they have been talking within SIAM, what is the triangulated view, it is coming to us a 5% kind of a growth rate. So therefore, within this 2 to less than 5% growth, there will be certain segment which will do better, right? For example, SUVs, CNG, EVs, all these segments should do good because of more action here. Greater positivity around SUVs and CNG has been there for last multiple years. EV, there are a lot of launch action. Many players are now participating in this category, so it should see a boost also, is the way I see. For us, the last year was more challenging than the industry because primarily of the hatches segment, because in SUVs we grew better than the industry. Even in CNG, we did much better than the industry, but in hatches, the 2 products that we had aged, and therefore it declined more than the industry decline in hatches. This year we have refreshed those 2 products, so we should be in a better position. In SUVs, we are adding a new nameplate, which is Sierra. In EVs, we are going to add Harrier EV and Sierra EV to the mix, and there are certain interventions in the current products also that we are doing. So it's a strong product cycle year for us, and therefore for ourselves, we are slightly more optimistic as compared to the industry.
Just continuing with the point of new nameplates, because we've seen, as you mentioned, a lot of new nameplates for you as well, but that is also expected for the industry. So how should we look at in terms of both the growth for the industry if we're expecting sub 5%? Will it be that market share will be taken from other players for Tata Motors?
Why I'm saying that, because hatches was the place where we declined the most, and therefore our base is very low. From the high base of FY24, we actually went down by 60,000 in terms of number of units. As soon as we launched Tiago Refresh, we got a 20% jump. And similar is the case for Altroz, where we are seeing very strong bookings coming. So because we have a low base, I think we'll have a strong growth in hatches as compared to industry, which might further see decline. And as far as SUVs are concerned, I think we grew better than the industry. So with a new nameplate and very strong performance of Nexon Punch, which has been ongoing for multiple years, it has been among the top selling SUVs. We are optimistic on the SUV side also. So that's the reason why I'm saying that we should definitely aspire to have an industry-beating growth.
And one of the key aspects that we've been speaking to a lot of auto ER&D companies as well, and they've given the challenge, especially of course in the export market, but also in the domestic market, of having conversions being very slow. In your estimate and in the companies that you work with, what could be one of the key challenges for this? Is this because of industry performance, or have you also changed a few things within Tata Motors in terms of showing that? Because we have a few listed companies as well which have called out, starting numbers as well as, projections for this year to be very limited. So what could be one of the key reasons for that?
You are saying conversion rate?
Yeah, in terms of converting it to clients and then eventually to orders, that has slowed down dramatically for the auto ER&D companies.
Frankly, I can't talk about the other companies, but you have seen our investment numbers. It has only been growing over a period of time. And we are very optimistic about the future, especially the India growth story. And we already declared that we are going to invest 33,000 crore to 35,000 crore. That is not the investment that we made in the last 5 years. So therefore, I can only speak about ourselves that we are going to invest. We see the India growth story going up to 6 million from 4.3 million in the next 5 years. If there are significant trajectory change than what we are projecting, of course we will look at it. But I think as far as India is concerned, the OEMs are making strong investments. In other geographies, we'll have to really look at. I can't comment much on that.
And specifically, one of the key aspects has been in terms of the number you mentioned, 33 to 35,000 crore, that goes unnoticed because of the 18 billion pound investment in JLR. So it's actually a very big number that you are quoting for over the next year. A lot of that will be funded through cash flows as well. So how does your free cash flow look over the medium term? If not quantification, if you can give us what kind of range should we expect, or any qualitative lines on it?
Just because you said that 18 billion versus... See, generally you will see auto companies invest anywhere between 6 to 7% of their revenues. That is the figure that we track, especially in the ICE business. Because coming to the second part of your question, which is how much we are going to invest, and this is the extent of investment which will be made, 5 to 7%, and it will be self-funded. So it will be free cash flow part of the business in mid-term and long-term both. Whereas EV in mid-term will be negative free cash flow because it is going through the investment phase. Although we are already delivering EBITDA positive, very strong EBITDA positive now. So eventually by the end of the decade, we believe that we have the ability between PV plus EV business both combined to deliver 10% plus EBITDA, which should make both the businesses self-sufficient from a free cash flow perspective.
I think just taking point for the electric vehicle part of the business as well, because we've seen a new launch by a customer, and for that month the market share wobbles. So it's more better to look at on an annual basis as well. But how do you see first on the rare earth magnet issue in terms of that affecting electric vehicles, and also in terms of a launch pipeline as well? Because you mentioned about Harrier EV as well as the Sierra EV coming. How does that, in terms of electric vehicle, do you think the market has slightly slowed down, or is it that the adoption rate is starting to go up now? So how would you specifically look at that, and any kind of, you mentioned medium-term market share of 50%, but do you expect that to start from this year itself? I think you're currently at 55, but in terms of launches from other players as well, how does that market shape up?
No, launches from different players will definitely affect. It's a very small market of 12,000 units a month. So one good successful product from a competition can really swing your market share immediately by 10% in short term. But over a period of time, things stabilize, and the set of actions that we are taking in every sub-segment is really going to count. Our entry into the high SUV segment, which is with Harrier EV and later on Sierra EV, is also going to come. So we are confident that in mid-term, 50% is where we would like to stabilize ourselves. Rare earth, if not resolved in short term, can create pains, but there are mid to long term solutions for that, which we will be working in the next coming months and all. So mid to long term, you can definitely work out on certain solutions, but in short term, right now we are dependent on the inventories that we have, and we are hoping for the resolution with the help of government that both SIAM and ACMA have been working with.
I think, and just want to get your perspective on, retrofitted EVs as one of the key aspects, because Harrier is of course a retrofitted EV, but it's very different in terms of pricing. It's quite similar to the petrol variant as well. How do you see that? Do you think that the customer will be differentiating in a brand new model that's launched as an EV? and a retrofitted EV in such a case? Because I think the last time we spoke, you mentioned about curve as well, that the EV penetration curve was 20% a few months ago. How is that shaped up as well? And your view on retrofitted versus a brand new model for an EV?
So let me correct the terminologies. Retrofitted is basically using a currently running car and slapping an electric vehicle powertrain, which is not promoted by OEMs, right? The terminology possibly that you wanted to use is a conversion EV, which means that you have you take out the ICE powertrain, and then within the space that is available, you fit an electric powertrain in an existing ICE vehicle. That was our first generation of electric cars that we made. But you would have heard about the active EV platform, which is a completely dedicated platform for electric vehicle. We are using the common top hat, and therefore this confusion comes. But we are using the common top hat because it is a top hat or a design which is liked by the people, right? We always have an option of coming with a new top hat. And possibly the myth or misinterpretation in the market is that a dedicated platform with a new top hat is what is a born EV. That's a big myth. So that's what I wanted to clarify. We have now all our products which are based on dedicated EVs, which is active architecture. Today we are using extensively the current top hats also. Over a period of time, we'll also come with products with top hats which are dedicated to these EV platforms also. So it will be a combination of both. So it's more a marketing story around it rather than the fact, because you are delivering, if I'm able to deliver 500 kilometer range, it is because you have created a platform which is dedicated EV. Therefore styling is something which, as we say, beauty, lies in the eyes of the beholder. So we should leave it there.
And just one final question on rural demand, because that seems to be something that a lot of companies are banking on for this year when the urban market side has slowed down. For you specifically, if you can give us some color on rural, what's your portfolio? It's not just about hatches, but of course, we've seen that aspiration also come in terms of, the compact SUVs as well as the mid-size SUVs that a lot of rural players happening. For you specifically, if you can talk to us about that aspect.
So our rural sales, which we say also the upcountry sales, would be about 40% of our sales. And typically in these places, you have all Tiagos, Punch, Nexon, all these kind of vehicles selling there. They, of course, are more gravitating towards, cars with higher ground clearance, because many places the roads are not that good. So those are the kind of products that get sold more in those areas.
Well, Mr. Chandra, thanks so much for joining in here at NDTV Profit, giving us the whole host of views on Tata Motors as well as the industry. But with that, it's a wrap on this very special conversation with the management of Tata Motors. Stay tuned to NDTV Profit for more.